Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Dr. Nomi Prins. Before we get into that interview, I want to let you know about an awesome opportunity, and that is the New Orleans Investment Conference that is happening from November 2nd to November 5th. The link that is in the description and the link that is pinned in the comments will lead you to that page where you can check out this conference. They are going to have some amazing speakers: Rick Rule, Danielle DiMartino Booth, George Gammon, and many others, many titans that have done a lot of research and due diligence in the precious metals sector. And so if you want to get ahead of the game and understand what is coming down the pipeline for the economy, for markets, for gold, for silver, please click that link in the description below. There's a virtual option as well as an in-person option. If you happen to be there in person, be sure to come say hello to me, as I'll be there as well. And so without further ado, we're going to get to the interview. Hello, Dr. Nomi Prins. Glad to have you back on the show. Prinsights Global has been very insightful for me. I'm a subscriber. Encourage people to go check that out and everything. But how are you doing today?
I am doing great. It's so great to be back on your show, Darrell.
Yes. So I want to start with the recent market volatility. Obviously, gold had sold off, silver sold off. I think that many people are having to cover shorts. And so oftentimes gold can be used as that liquidity lever, especially if they have to cover shorts from losses or huge losses in the general markets. But just thinking about a few things that are going on. One thing was the regional banks. There were some issues there that was reported about some losses and such. And some people are saying that, oh, is this one cockroach in the kitchen? You know, meaning that often if you see one cockroach in the kitchen, there's more underlying or more there hiding or whatnot. And so I want to get your perspective there on the banking sector, since you have a lot of experience there.
Yeah, so the two major culprits or cockroaches, as you call them, were Zions Bank, one of the main regional banks in the country, and their shares went down like 13 to 15% or so after they disclosed that they're going to take a $50 million loss on their loan portfolio for the third quarter. And then Western Alliance Bancorp also dropped 10-11% after it disclosed that it was actually suing a borrower for potential fraud or, again, in a bad loan of some sort. And that was enough to basically create a run on regional banks, on regional banks, ETFs, and so forth, and to take a look at, well, what's really going on under the surface for that sector. Now, we have been concerned about that sector here at Prinsights for years now, really since I started Prinsights in the middle of last summer, but even before that in other incarnations of the work I've been doing, because the regional banking sector has become this composite of all sorts of loans that are very leveraged from the standpoint of consumers, from the standpoint of small businesses, from the standpoint of commercial loans, all in the same portfolios. And so they have had increasing delinquencies on paying those loans. They have shown increasing defaults. In fact, the delinquency figures are up towards the financial crisis of 2008 type percentages. And so this is something that's been percolating. But what's happening now is, we're in a quarter, earnings are coming out, there's focus on some of these banks again, and they're showing us what has been brewing in terms of real numbers and taking real losses. And I do expect there to be more losses over the quarter for the regional banks. And the other reason for that is that this consumer stretch or this over leverage that I just sort of mentioned, we are looking at consumers in the United States, even though they are on the outside pushing the economic growth figures. A lot of the GDP is contingent on goods and services and consumer spending, but they're doing a lot of that on debt. So we have record debt in terms of household leverage, in terms of mortgage debt, in terms of credit card debt, in terms of auto loan debt, in terms of second loans on that debt. Right. And also you throw into that the fact that the commercial loan sector, we still haven't gotten back past even the post-COVID days of offices rerunning and not having high vacancy rates and throughout all of that. And this is something that particularly hits regional banks, because the bigger banks have the ability to sort of offset some of that exposure just by the multitude of other things that they do in markets, whether it's speculative trading or investment bank deals or other types of fee generating businesses. Regional banks can't do that. They're struck at the core of when when loans go bad. More so now, I think, than even in the financial crisis, where the big banks were buying a lot of this bad debt from the regional banks, and now they're kind of not. They've learned their lesson, but the regional banks are sort of stuck with it. And we're going to see more of that. Now, the market's traded off because of not knowing how much more we're going to see or when we're going to see it. I expect this period ultimately to be diffused by the markets, because there's other things to focus on, like what the Fed's going to do in terms of cutting rates. And this might be a situation where they cut rates by 50 now instead of 25 at their next FOMC meeting, because these problems are coming to surface, and a lot of them are because of the higher cost of these debts that are being carried in these problem loans. But gold and silver, as you mentioned, has traded off a little bit. We're trading off from record highs here. And so any small amount that gold or silver is being, quote, hit by, and as you mentioned, to create liquidity to pay off other things or other losses, first of all, it's coinciding with earnings. It's coinciding with a Friday, where a lot of times people shore up their portfolios, whether it's individuals, institutions, banks, corporations, what have you. And it's really never a good day to really be involved in the markets unless you want to buy those dips, which I think is what we're seeing, mini baby dips, if we want to even call them dips, in gold and silver, along a very, very strong high tailwind super cycle.
Yeah, definitely. I've learned about the recent acronym TINA. There is no alternative when it comes to how to protect your capital, protect your wealth in these situations. And so people are flocking to precious metals, and even just thinking about the just some of the recent performance. Obviously, we've ran up significantly. I know that we've surpassed your original target for 2025, which was at 4,000. And when I saw that target, I was like, what does Dr. Nomi know that I don't know? and then we sure enough surpassed that. Same thing with Goldman Sachs. And then you upped your target, for next year at 4,500, and Goldman Sachs up theirs to 5,000. So, just seeing us blow through those targets was pretty. Yeah, I didn't know how to take it in. It was just like, oh wow, it's creating a lot of wealth for me. But so just thinking of like where we go from here. So obviously, the trade tensions was another compounding factor within this recent sell-off. We had the whole rare earth export controls that China implemented, and Trump threatening China with 100% tariffs, and then kind of backing off. He kind of did the taco thing. Trump always chickens out. That's what some people call it or whatnot. But so this is heating up too. This is getting kind of very concerning for me, and just thinking about, okay, how is this going to impact, even the average person? And so I just want to get your overall broad perspective on this export issue with rare earths.
Yeah, and just the whole thing with physical commodities, with rare earths, with tariffs, even with gold. This is about ultimately looking at where these things exist throughout the world, and how the supply chains from underground through to end product actually look, and who's controlling them and who wants to control them. And that's a through line across all these commodities for different reasons. And that was one of the reasons why, I focused also on rare earths very specifically, because rare earths is a component of the market. It's 17 of the chemical elements on the chart, on your sort of old chemistry charts. The sort of story about them is, oh, they're not so rare, they're everywhere. And that's actually a bit of a misnomer, because the ones that are needed for their magnetic properties to drive defense missiles, to drive drones, to drive energy storage, to drive the EV business, and not just with cars. It's not just about Tesla. This is about with buses, with trains, with all sorts of potential flying devices, and planes and so forth. This is something where certain rare earths, certain of these materials are very much in demand. And right now, China currently has access to, the numbers vary, but 45 to 60% of the supply of what's available, sort of on ground, underground, but it produces somewhere between 70 to 90% of the end product, whether that's permanent magnets or other forms of magnetic devices, anything from what's on our computer screens to, the magnets in your fridge to, how to work your lights and your wipers in a car. There's all sorts of storage magnetic properties that these rare earths are used for, in your phone. Just to basically operate your phone. So they're sort of in everything that we use that requires holding a charge and holding a magnetic relationship secure. What's happening between, though, China and the U.S. is that the U.S. has recognized, after years of being very, very behind, it used to be ahead in the rare earth space, and it just gave that opportunity to China. China ran with it, is that they need to do something from a policy perspective to change it. And this has unleashed this whole series of back and forth geopolitical arguments and maneuvers and battles. And the most latest manifestation was when the U.S. said, all right, we're going to back MP Materials, which is a U.S.-based rare earths company. It's been around a long time, but we're going to back them now with a public-private partnership. We're going to take an equity stake in the company, which we haven't done before in this space. We're going to have Wall Street come in with extra money on the side to help it to get going more quickly, to be one of many things that can combat the Chinese control of the end supply chain, particularly for magnets. But that's kind of a drop in the bucket in terms of changing everything, and it doesn't happen overnight. The second thing that has been happening is other forms of rare earth support have been happening with Western countries. So we've seen in the EU billions of dollars going into NEO's new permanent magnet processing plant that's going to be built in Estonia, and that's going to need rare earth supply, and that's going to have an the supply is going to go out in terms of products. All of these things are happening. All these governments are trying to break China's chokehold. So what China said was like, look, that's okay, but we're not going to just let that happen. We're going to step up, and this is not the first time. China has very much choked off supply for rare earth and rare earth products in 2011 to Japan during the Biden administration when they tried to tariff permanent magnets and throughout. And we're just going to remind you that we control a lot of this resource and a lot of the end product. And so when they said, as of November 1st, one date, and as of December 1st, we're going to choke off different kinds of supply to the United States and Western countries on the rare earth production side, the U.S. said under Trump, all right, well, we're going to tariff you by 100% for everything that we import from you. Well, that's not a feasible thing to threaten, because even though that has been a high tariff target from March of this year to China, it keeps getting beaten back because at the end of the day, we need their supply. So all this bravado that we see in terms of tariffs in anything in life, right? You can only fight hard and loud for what you can afford to lose. If you can't afford to lose it, or you can't afford to lose it yet, at some point, you're going to back down, or you're going to have a carve out in that thing that looks like 100% tariffs. And it's going to be, yeah, but not for these particular magnets, not for these particular semiconductors, not for these particular resources. Because at the end of the day, things still need to function. And China does have the United States kind of by the throat with respect to rare earths right now.
Yeah. You kind of reminded me of that song, Macho Man, because I think, and I had this analogy too when Trump obviously came out with the tariff policies back in April, and there were it seemed like many nations were just caving in, and then you had the back and forth with China. Then China said, we're not going to cave to this bully. And it just reminds me of, like, I just keep thinking of the analogy of the schoolyard bully who goes around and terrorizes kids and everything, and then you got someone that's that same bully size that steps up and says, "What are you going to do about it?" And then everybody's looking like, "Okay, what's going to happen?" And so it's just been kind of interesting just looking at these dynamics between global leaders and whatnot.
We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
Just thinking about China having this chokehold, so there's been a lot of talk about Brazil having rare earths, and I've been kind of thinking about, okay, but Brazil is the B in the BRICS, and so how does that work within this dynamic? Obviously, Brazil is its own sovereign nation and doesn't necessarily have to follow the rules of the BRICS or whatever the case may be, but I know that relationship between Trump and Lula, I think it's Lula, has been, kind of contentious at some points or whatnot. And so, it's looking like he has to go, kind of check in with people that he hasn't had the best relationship with. And so just want to get your perspective on Brazil.
Yeah, and this goes back to the fact that when you need something, you actually need something, you kind of have to be nice, even geopolitically, at some point to get it. The only other alternative is war, basically. But otherwise, any kind of sort of economic, efficient solution has to do with recognizing where you can get supply from, recognizing what trade routes are, and recognizing how you can behave from a diplomatic standpoint in order to achieve that result. And with Brazil, it's very interesting because, yes, they are the B in BRICS. They also, by the U.S. government's own data, have the second largest volume of reserves underground of rare earth materials, second only to China. So at the moment, they have actually access to, they have possession of, whether it's underground, near ground, that's a separate distinction, but 21% of the world's rare earths. The United States, inside its borders, has 1.9%. Right, so Brazil is substantively ahead of the United States in terms of the actual materials, in terms of its geology, that are needed to supply, in particular, permanent magnets with the most magnetic of the rare earths and so forth. Brazil didn't necessarily know what they had and the power of it until it became part of these recent tariff wars. It's not that they didn't know they had rare earths, they did. But what they're understanding very quickly is how they can leverage their supply into having a more powerful seat at the table. Now, Brazil has always been in between China and the U.S. in terms of trading partnerships. China is currently Brazil's largest trading partner, but it had been the U.S. for many, many years. It's just recently, in the last few years, China's jumped into that position, but they're very close. So regardless of any other conversations that are happening on this sort of leadership basis, on an individual Lula-Trump type basis, the reality is our countries have a lot of synergies. We have a lot of trade. We have a lot of foreign direct investment in Brazil. We have a lot of companies in Brazil. And we buy a lot of imports from Brazil. And rare earths are the latest and most probably important in our lifetime's manifestation of that relationship. So what's happened recently, very recently, is that Trump and Lula have bumped into each other. Lula has said to Brazil, it was an okay meet, wasn't a meeting, but it was an okay interaction. They separately had a phone call. Trump and the administration characterized it as a, quote, friendly phone call, and they're going to set up a physical meeting. And I would strongly suggest that what we watch from that meeting is some engagement specifically around rare earths between the two leaders, noting that they're friends over rare earths, or some sort of language to that effect. And Brazil will continue to supply China with rare earths to be produced as well. But what Brazil has that China can't give us and that we need, it also has the ability to very cheaply, if the investment is put into this, process rare earths into magnets. and it has a couple of very nascent processing plants. I'm on the board, as you know, Meteoric Resources. That's our goal, is to have a future processing plant that can scale the size of the asset that we have in terms of rare earths in the caldera in Brazil right now. But it can cheaply, because its energy costs are so low in Brazil, it has an energy surplus, be a manufacturing hub. And for the United States, it is the closest, best alternative to augment any other domestic supply chain to its needs currently for rare earth materials, for magnets, and for its future.
Yeah, that's a very interesting point, especially just thinking about how much energy, Petrobras and some of these Brazilian companies produce. And yeah, and so I know China, I think to my understanding, China imports a lot of oil. So you have a nation that produces it and then also has the capability of mining as well as processing these rare earths. I was wondering about the processing front. Obviously, this takes years to develop. To my understanding, to get these plants online and things of that nature. I know China's been working on this for decades, ever since they acquired, I think it was Magnequench, and then they ended up moving the technology and such to China. And so with that in mind, how long it takes for these to come online. What does the relationship have to look like between now and then? I mean, especially if China is saying that they're not just going to sit by and just let this happen and not do anything, right? And so I'm just kind of wondering about what does that mean in the near and intermediate term?
I mean, it means that if the U.S. is truly serious about altering the supply chain from ground to production, for rare earths to magnets, it has to put a lot of money, and beyond the MP deal, beyond some of the funding it's given to Ucore, which is a Canadian company which is starting a processing plant in Louisiana. It has to be faster and more active in terms of helping to fund that, because there is definitely private money coming into these areas, without a doubt. But when you're talking about trade, when you're talking about the relationship between countries, when you're talking about the significance of having public money anchor private money, there has to be additional step-ups. And I think, therefore, the relationship specifically through rare earths, and not just rare earths, but specifically through rare earths between the U.S. and Brazil, which will unfold over the next couple months, as I believe Trump and Lula will figure it out. I'm not saying there won't be some, sort of maybe tempers flying or words said along the way, but they both need to have this figured out. They need each other. Brazil sort of needs the U.S. buy-in to have a non-Chinese counterpart to this part of their supply chain. It's not that they're going to stop trading with China. They're not going to stop taking Chinese money in terms of investing in their own infrastructure and creating whatever deals around that that they're involved in and that they already have. But for them to have more power as a nation, having the ability to work with the U.S. and with China has been very integral to how they've grown. And again, around rare earths being so important and them having such a stronghold right now on supply, it's more important that we see an official sort of arrangement or agreement or something between the White House and the government of Brazil at this time. And, you ask how long it will take to create plants. It really depends on how fast the funding is there and what can be done to scaling. We're looking at putting a pilot plant in the next year or so. So it's, that's pilot. That's not going to create enough offtake to supply the U.S. Defense Department, but it's certainly going to be enough to qualitatively supply some of the offtake arrangements that we have in terms of how those get then processed into magnets so far outside of Brazil. But definitely the infrastructure in Brazil is there. And the energy is not just coming from oil. The energy actually surplus in Brazil, it's really important to know, is that Brazil runs itself internally on hydropower. Mm-hmm. And it's able, and it has the infrastructure to run off hydropower in a significant way to scale. And that's one of the cheapest ways to run plants, to run manufacturing, to run the separation of rare earths into oxides that then can be used in permanent magnets. And so the economic efficiencies are very, very high to have processing happen in Brazil and not just to fund processing plants in the U.S., which is the current mode of the United States government. I think they're going to figure out, and hopefully, and we're involved in having these conversations as well, but it's just logical that it makes sense to work with processing in Brazil, which is what Brazil wants to do. It doesn't want to just be supplying raw materials to the world. Ultimately, it wants to be a player. And the way you're a player is also to be involved in the end products.
Yeah, definitely. Thank you for sharing that. So just thinking about the equities, I mean, the equities have just been just taken off. I was in a few different companies and I didn't even know what they did. I just knew that it was a hot topic and it's gonna profit most likely, but hot topics profit sometimes. But depending on when you get in. But just thinking about these equities have just been taken off like significantly. I mean, recently, obviously, that was a huge sell-off and such. But I'm kind of wondering, about even the markets and how they're processing this information, because obviously a lot of these companies are still early phases, especially when it comes to refining and production and all of that. And I'm just thinking like, okay, is this a long-term trade for folks? Just thinking about the implications of it. And so just want to get your perspective there.
It is. It's both a short-term and a long-term trade. The reality is there's more and more focus now on the mining sector than there has been for decades. And a lot of that is because policies aren't just about speculative investors chasing the next big thing. They're about foundational changes that are happening in the world and with powers throughout the world, and with the West recognizing that it can't sort of outsource all of its production, even though it does, or a significant amount, to China, because that puts the West, in this position of not being able to really bargain, to just say we're doing tariffs, but then back off and all of those things, and to have healthy competition throughout the world. This isn't even just us versus them or China versus U.S. This is about just general diversification of risk and sort of healthy market and economic strategies. And all countries that have some sort of power want to enhance their power within this context along the way. And as a result, these commodities are being demanded for different reasons, but they all have to come from the ground and they all have to be processed. So when we look at the precious metals, for example, when we look at gold, when we look at silver has the precious metal side use, but it also has industrial scale use. And yet it's at 110, 150 million ounce per year deficit, and that's only going to grow as more things are built that require silver. Gold demand's only going to grow as more central banks continue to buy gold as a diversification to the dollar and as a way to shore up their own trading strength. Not necessarily as a gold standard, but as you mentioned, as liquidity, as reserve, as something that is not controlled by an outside country or an outside monetary policy. That's not going to stop. And when we see allocation announcements like Morgan Stanley say, we're done with the 60-40 thing between equities and bonds in terms of what investors should do, go 60-20-20, 20 into commodities. These are all things that are part of a larger motion, and they're going to continue to give a bid, even if there's dips, even if there's sell-offs to commodities, because it takes time to build a mine. It takes time to get stuff out of the ground. It takes time to produce it into end products. And we are already at a deficit where the world is moving very quickly in the opposite direction. When you look at platinum metals, it's the same thing. There's jurisdictional problems with some of the places that platinum comes from, like South Africa. So where's the next place it's going to come from? How fast is it to get a mine together? How fast is it get quality platinum out to market? That's why those prices are squeezing. We look at aluminum, which is a really boring metal, which no one cares about. But it's in like everything, from your soda can to your grid. And aluminum is at 3.5 year highs. And a lot of that's also because there's a dearth of supply and production relative to demand. And you look at uranium, it's the same thing. We're in a situation where we are effectively sanctioned against Russia. We've created sanctions against Russia, but at the same time, we're still taking some of their enriched uranium because we still don't have enough to run our current nuclear capacities, our needs on the uranium that we have. And so again, the government's fast tracking processing plants in uranium, but that takes time and that takes uranium, and that's why that's going to push those prices up. So we just have a situation where there's been a bit of an asleep at the wheel thing for some commodities, and another awakening of sort of more insatiable demand for more acute reasons in other commodities, but all of them really face a similar problem, which is that there's simply more demand than there is supply. And it takes, unlike with money, where you can create dollars, you can create a QE program in order to sort of create money to buy debt. You can leverage money by loans in the market. You can't do these things with real commodities. They take real time, real permits, real jurisdictions, real environmental issues, real weather problems, real time. And that's why it's a long-term cycle as well as a short-term cycle. It's short-term because people are noticing, and it's long-term because just because you're noticing doesn't mean that the gap between supply and demand is going to go away anytime soon, and that's where the long-term value is.
Gotcha. Yeah, because I was definitely thinking about the last commodities bull run. I mean, it was a little over a decade, and just thinking about how far we've moved and how fast we've moved recently. Just thinking about, okay, like how long is this going to last? So I appreciate that perspective. So as we begin to wrap up, I do want to touch on your targets for gold and silver. I believe your target was $50 for silver.
Yeah. So basically, in January, I had a target of 4,000 for this year in gold and 50 for silver, which we've passed. Little dips and whatever. Silver did hit 52, 53. It's a bit back down. Gold obviously is on its way, and I moved that target on gold to 4,500 last month, right when it was around. Well, before it was 4,000. That's for this year, this turn of the year. I think silver, and I actually said this last week on a different show, but I think silver, having hit the 52, 53 mark, which it did, again, backed off a little bit, but is really poised to go to 60 in the first half of next year and to 65, 70 by the second half. So that's what I see right now for silver because of all of those supply demand issues that are not going to go away. Gold, I think we're going to hit 4,500 at the turn of this year, whether it's December, whether it's January, what's around that time. And I did say 5,000 for next year in January. But right now, I would say we're more looking at 5,500, and that might change, as I sit down and look at my January forecast. But that's where I would say we're at for the end of next year, end of 2026. So we're still looking at more appreciation in both of those, probably more acutely in silver because of that additional gap. But these are not commodities that, with the exception of various market waves that happen for everything, are going to, sort of close that gap between supply and demand, which is going to continue to push those prices higher. And it's also going to continue to push the right miners higher. We've seen some significant upsides in some of the bigger silver companies and the bigger gold companies. But some of the smaller, some of the juniors that have, solid quality, that have their permits in place or about to get their permits in place, that are in jurisdictions that aren't, chaotic or problematic, really still have a significant amount of upside because they're the ones that are going to be supplying new supply in addition to what's already outside of the earth into this growing demand.
Yeah. I'm curious to your formula. I mean, you don't have to give us the secret sauce, but just thinking about like you called $4,000 gold, you called $50 silver. We hit both of those, and so I'm like, is Dr. Nomi a technical analyst? I mean, obviously you're doing a lot of fundamental work in understanding the market structural dynamics underneath these commodities. But like, how are you coming up with these targets? I'm just I'm just curious because like we hit both of your targets, and I'm like, dang, like I need to follow Dr. Nomi's work a lot more.
Well, I'm not a technical analyst. I mean, I'm certainly familiar with all the aspects of technical analysis. I do look at charts. I do follow people who are very good at it. But I look more at the fundamentals, and not just the economic fundamentals. I think the reason for appreciations in prices, particularly in commodities and in commodities relative to miners, is more important to me and in how I look at things than necessarily the technical charts. I mean, they're a part. We notice them because prices are prices. They move with momentum, and we do look at the momentum in terms of where buyers are coming in and how quickly they're coming in. So, for example, I raised the bar on gold prices because of the information that came in terms of new Western buyers accessing gold ETFs. And what would happen was, as of mid-year numbers, for the first time, Western buyers and European buyers were outpacing Eastern buyers in terms of retail buyers, whether that's through ETFs or physical, in gold. And so to me, that's a sign of, well, you still have the other ones that aren't going away. And then you have this entire new demand coming in. And yes, some of that can go away. You can take profits, et cetera. But that, you look at the staying power of that. And that to me is a momentum aspect, plus the fundamentals, plus tariffs, plus what's considered a critical mineral, plus where are the mines, what's operating, where are their problems, how are the management teams going to address either their problems or access more of the supply that we need while supply is growing. So I really look at things in a combination of those fundamental factors, as well as from a geopolitical economic lens. And that's how I look at where these numbers
Yeah.
can go.
Yeah, definitely. So when you came up with your target for this year based on your research and such, let's talk to Dr. Nomi about 2 years ago, 3 years ago. Would you have imagined that we would have hit 43? I think we hit 43.70 on the gold futures market, over $53. Would you have imagined that we would have hit these levels at this stage in this year?
Well, 2 years ago, I did think we would get to 4,000 because I thought we would get to 3,000 at the turn of last year, 2 years ago. So I have been watching gold in particular move according to these, additional demands and momentum and supply and demand gap factors coming into the market. So I did imagine it. In fact, I was one of the few people. I shouldn't say that. That's not fair. There's certainly several people that I absolutely respect who have imagined gold to be higher at this time than I did. But in terms of what I saw, I did see this level a few years ago, because of everything that was, sort of moving towards this direction. And not because I'm not a fortune teller, but there are just certain things. It's the same thing with uranium. Right now, there's a gap between futures prices and spot prices, but it's closing, which means the futures prices are going to move up, which means the spot prices are going to go up. And then again, I look at policy, so I'm very much a student of policy, and that sort of also colors the factors that I look at. But I did think that gold would reach these levels. And I did think that silver would reach these levels a couple years ago. And that's because, again, we had central banks already buying. They were in their second year of record buying. We were just coming out of the initial sanctions against Russia, and like how the BRICS are particularly the eastern side was of the world were trying to formulate policies away from the dollar. And it was kind of obvious, honestly. And that's one of the reasons we told our readers to invest in gold, and to have the patience, and to invest in silver, and to invest in uranium, and the et cetera, and the miners that were going to be involved in the major transformations in those spaces.
Yeah, it takes a lot of conviction to hold firm to that, and allow the data to speak, and everything, because I know many investors were getting upset with the performance of the metals a few years ago. So definitely need that voice of reason. So you all be sure to go check out Prinsights Global to hear more of this voice of reason in data and analytics and such. And Dr. Nomi, appreciate you for coming on the show.
Thank you so much.